Unfortunately, the stock market sell-off intensified on Friday following the sell-off on Thursday, which ensued because of tariffs that were implemented by President Donald Trump on the United States worldwide trading partners. That created a lot of fear, and investors avoided investing in anything that had anything to do with risk. And so, one of the upsides of a big sell off, and I know it's not very much consolation, but one of the upsides is that there becomes an opportunity to get some great companies at lower prices. That is, of course, if you're still a buyer. If you're approaching retirement and you had so much money in the stock market, there's little consolation in the fact that there are lower prices because you're not interested in buying at that point. You're more interested in selling and retiring and using your money. But for most of us, we're still in the accumulation phase of our stock portfolios. And so there are some bargains and some that should be avoided still, even though they're at lower prices. So over the last few days and over the next few days, I'll be doing a lot more research, identifying companies, how they're going to be impacted by the tariffs, if the lower valuations are worthwhile, etc., etc. And in this case, I'm going to look at Palo Alto Networks, one of the leading cybersecurity companies in the world, and evaluate how its business will be impacted as a result of the tariffs, and if at these lower prices it makes sense for long-term investors.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Palo Alto Networks is now trading at a forward price to earnings of 42. And these valuations are about the lowest it's been going back a year. So if you go back further, the valuation had gotten cheaper in 2023. Remember, at the end of 2022 is when investors had our last scare, and that was a result of increasing interest rates by the central bank. And those higher interest rates created the lack of enthusiasm to own stocks. More people wanted to own bonds because now you could get higher interest rates with bonds. And then because of the higher interest rates, investors were worried that the US economy would go into a recession. But that never happened. Here we are 2, 3 years on from those higher interest rates, and the US economy has been extremely resilient. Unemployment rate is still around 4%, even though it's been increasing a little bit. We just got another jobs report today that was solid, another 100 or more than 100,000 jobs created. And so the US economy has been resilient. Now, will it survive these higher tariffs and not go into a recession as a result of the tariffs? That remains to be seen, but I've certainly increased my prediction or my probability of what I think the odds are of a recession in 2025, and I've increased those odds in my own calculations. Still, a company like Palo Alto Networks operating in the cybersecurity industry, it's not going to be directly impacted. Indirectly, yes, and here's how. The buyers of cybersecurity services are still going to need to buy cybersecurity services. The trouble is going to be, how much are they going to want to pay? Are they going to want the most premium services? Are they going to look to cut costs somewhere? And cybersecurity is an area that they will likely look to cut costs. How much will they cut? I'm thinking 5 to 10% would be the minimum they would cut in their cybersecurity budgets, maybe trading down to a less premium service, things of that nature, or calling their cybersecurity provider and asking them for a better price. And if they don't get a better price, they might cancel or switch to another provider that does offer a better price. But businesses are going to look to areas to cut costs because of the higher costs they're going to face for importing things. So a lot of those buyers that are dealing with imports and having to pay higher import tariffs, they're going to ask for cost cuts. At the same time, because of the slower economic activity, businesses that are not related to import-export will also look to cut their budgets as well. And so there will be a industry-wide, or I should say economy-wide, reduction in spending at least for the next few months as they try to learn how these tariffs are going to impact their businesses. How negative is it going to be? Who's going to increase prices? Who's going to keep prices the same? All of that needs to be learned. They need to operate, they need to change prices, see how consumers respond, and then move forward. Palo Alto Networks near term will experience that negative impact. But the good news is for Palo Alto Networks, unlike many other businesses, the impacts to Palo Alto's business is likely to be temporary. After these next few months, maybe 3 months, 6 months, 9 months, maybe 12 months, maybe 15 months, maybe 18 months at the very longest. After that, it should be back to business as usual for Palo Alto Networks. It's not going to face a permanently higher cost of goods because it's importing product. It's not importing product. So it's not going to face a permanent higher cost. It's going to face a temporary decrease in demand from its end users. It's going to experience that temporary decrease. And it remains to be seen how long and how deep that decrease is in spending. Now, before these tariffs were announced, I calculated a discounted cash flow model for Palo Alto Networks, and the company generates excellent cash flow. It's a relatively asset-light business, and the analysts that are following the company, they expect it'll generate $3-4 billion in free cash flow over these next few years, rising to $6-7 billion by 2030, 2031. So it's generating strong cash flows from its operations. My intrinsic value calculation has it at $120 per share when the current market price is $153 per share. So looking at the forward price to earnings, the stock looks relatively cheap. Looking at the intrinsic value, the stock looks a little bit overvalued. So depending on which source you want to trust more, and I don't trust either of these, I have a dedicated number that I apply to each valuation source that I sometimes adjust based on unique circumstances. So with Palo Alto Networks, I'm taking a collection of various things, right? If you read my book, The 6-Step Investing Framework, I give you those numbers, the algorithm that I apply to each step in my 6-step framework. And valuation is one of those 6 steps. It's not everything. It's just one of those 6 steps. Palo Alto stock was down 7% today, and it was down even more on Thursday. So to answer the question, is Palo Alto stock a buy at these lower valuations? I have it on the borderline. And for me, borderline is something that's between a buy and a hold, but closer to a buy. So for those of you that do not require a larger margin of safety when you're buying stocks and you've had Palo Alto on your mind as something that you've wanted to own for a long time and you see this as an opportunity, I don't think it's a bad idea to buy at these prices. For others that are interested in Palo Alto, but you want a greater margin of safety, you can give yourself a price point and say, you know what, 153, a little bit too rich, maybe at 145 or 140, I'll jump in here. And for the rest of you that are even more considering on valuation, that are even more looking for a larger margin of safety, you can wait for something in the 130s or 120s. You may or may not get it, but there's no harm in waiting, right? You still can put your money in a money market account that's generating 4% rate of return while you wait for the businesses that you like to approach the prices that you want to pay. Nobody is forcing you to pay these prices for these businesses. You can just take your 4% rate of return in the money market account with close to zero risk until something pops up in front of you that's so attractive, that's a undervalued business that you just have to buy at that moment. So that's where I stand with Palo Alto Networks. I have it on the borderline between a hold and a buy, closer to a buy. Hey everyone, I'm excited to announce a brand new private Discord for our channel members at the VIP Discord level. It's a great place to connect with me directly, engage with like-minded investors, and learn more and take your investing to the next level. Spots are limited, so join now before it's too late.